talking about Sensex, 54,000 is gone from Sensex right now. We're below 53,500 levels. So what's the next set of resistance and support levels for Sensex?
So I think for Sensex, the next support would probably arise at the psychological mark of 53,000. That would be a next level of support for the index. And on the downside, I think, or rather on the upside, we would look at 54,500 as a resistance. So I think what's been happening is over the last 3-4 days, there was a few days of attempt to try and hold up above the 50-day moving average, but that got yielded, I think, 2 days back for the indices. And once that happened for Sensex, we've seen the Sensex sliding below that 54,000 mark for itself. So now the next level of supports for the index is at 53,000, but the resistances still remain the same at 54,500.
Okay, those are the levels to keep an eye out on the Sensex. But let's start with our query segment. And let me first welcome on board Avinash, who's joining with us as well. A very good morning to you as well, Avinash, and Kunal to you as well. But let me start with the first query with Kunal. We have the first query which is coming in, and this one is on Minda. Now, Debidas is holding a Minda from the last 5 years. The buying price is coming in at 314 rupees per share. Shall they add more quantity at the current market price? Should they be looking to book partial profit? And they want a long-term view coming in from you, Kunal.
Vinny, just to clarify, is it Minda Corp or Minda Industries?
She's just mentioned Minda. So
I'm assuming it's Minda Industries because Minda Corp is below the 300 levels. I think the last 7-8 years at least the stock has been trading below the 300 mark. I'm not sure if it's adjusted towards certain special situations for the stock price, but then I'll probably try and comment on Minda Industries. That's a stock which is trading at 530 plus levels, looking quite attractive. So I would recommend that not to try and book profits over here, but you can continue to hold on. Assuming if you have a time frame of 6 months to 1 year plus, then you can look out for targets of at least 625, 630 over the very near term. And then as and how the stock scales past about those levels, you can probably try and trail the stop loss. So I would suggest a hold if it's Minda Industries.
All right, this one is coming in from Sushil, and Sushil wants a view on Tata Communications, Kunal. He's saying that he's already holding 500 shares of Tata Communications at a price of around 1,050 rupees per share. He's saying the results are expected on July 20th, but nevertheless, what should his strategy be for Tata Communications? And also, good morning, Kunal and Avinash, but Kunal, this query for you.
Good morning, Cheryl. So I think on Tata Communications specifically, I would probably expect the stock to get into a bottom out formation. It's a stock which would take a lot of time to try and juggle into finding a strong bottom and then getting into a recovery phase. So it's a process which I would believe that would take at least another 3 to 6 months, if not more, for the stock. So if you bought at levels of 1,050 odd, the stock is at 970 approximately. Either you can look at maybe exiting the stock if it comes closer to 1,020, 1,050 levels, which would be a cost price, and then look to buy back again. Or if you're looking to average, then I would suggest that wait out for a point where the stock comes back below that 900 mark. That could be a point where you can look to average. And as I said earlier, that possibly you'll have to wait out for at least another 3 to 6 months for the stock to actually show signs of strong bottoming out formations.
Okay. Avinash, coming to you, we have the next query coming in from Justine, who's from Kerala. They hold 300 shares of Tata Power at 93 rupees and 400 shares of IDFC First Bank at 45 rupees. Now, they want a long-term view coming in from you on these stocks. And do you think it's okay to hold IDFC Bank, First Bank for the long term?
Yeah, I think as far as IDFC First Bank is concerned, I think the business commentary given in the Q1 for FY23 has been pretty solid. In fact, this is one bank which has gradually, made a CASA ratio of almost 50%. And as far as the business growth is concerned, the disbursements for both the SME or the MSME sector have been pretty solid. So my sense is, I think, after a long time, the bank has now started showing very strong numbers on the operational parametric, especially on the return on equity. The return on assets is also going to be pretty good going forward. So I think, if the investor has at least a 1.5 to 2 year view, I would believe that IDFC First can offer a significant risk reward. The bank has underperformed for a long time, but I think going forward, hopefully, if the numbers are good, one could expect a decent risk reward. So would suggest them to continue to hold on. There's no reason to sell out despite the fact that, it's below their buying price. And as far as Tata Power is concerned, I think, the buying price for this investor has been pretty good. I would believe that, Tata Power is slowly changing into a green energy company with solar energy, solar rooftops, electric vehicle, charging kind of businesses, which are going to get fructified in the next couple of years. So I think if the investor doesn't require any kind of capital for any urgency requirement, he should hold on. My sense is FY23 and 24 should be a lot better, and I think the stock should gradually, give a decent risk reward. But maybe in the near term it will consolidate. But longer term prospects, I think, are definitely good.
All right, the next query, actually I'm going to club a couple of queries. They're all a tech related queries, so let's get it out of the way at one go, Kunal. First query is coming from KVG Reddy from Hyderabad. He's bought Wipro at a level of 680 rupees per share, wants to know what should he do with his holding. Next is someone with TCS, 100 shares, 3007 is the price. Time to buy more in TCS, and Sudesh wants to know whether it makes sense to buy HCL Tech and Infosys right now.
So I think I would probably club it first. According to the IT stocks, I would probably expect that the IT stocks would get into a zone of underperformance, like what we discussed. I think 2 days, 3 days back on the BNSN as well, when I had mentioned this with comparison with the banking index. Now, specifically talking of large cap names, I would be of the belief that TCS has come back closer to that strong value territory. Now that doesn't mean that the stock would bottom out immediately, but then possibly the stock from current levels, say till the next 10% correction, could actually be termed as a good value kind of a buy. So if you have a time horizon which could probably be extending for 2 years plus kind of a time frame, then I think makes sense to average or look to buy TCS at current levels, some portions, and then keep some powder dry for another 10% correction from those levels. In a similar vein, I think Infosys at 1400 levels looks attractive. Wipro has come back below the 400 mark. That's also an attractive proposition. But as I said, possibly these stocks can have one leg down where they can correct over the next 3 odd months by another 10%. So buying in tranches in 2 stages could be a better advice into these IT names rather than going all hog at current levels.
Okay, and let's switch gears from the IT space. That was all about the IT stocks, but moving on from that to the defense side, and this query is on Bharat Dynamics. Avinash, this one is for you. Ramesh has bought Bharat Dynamics 200 shares at 847 rupees per share. Should they continue to hold this or average out? And if there's any suggestion coming in on this one?
Yeah, I think Bharat Dynamics, currently has an order book of more than 7,000 crores. And I think what is important is that the management has clearly hinted that over the next 12 months, this order book could even exceed 10,000 crores. The investor has bought this share, at a slightly higher level. But I would believe that, looking at the kind of earnings trajectory this company is expected to deliver in FY23, my sense is that the investor should hold on. Defense is a space which is a very strong kind of space which is unaffected by crude oil prices or interest rates, and order book visibility being strong, at least for the next 2 years, the revenue visibility for BDL is very strong. So I think continue to hold on, keep a time frame of 12 to 18 months, and I think the investor can definitely earn a better risk reward, considering the fact that this sector is going to show a strong top line and bottom line growth in the next couple of years.
Just before I move on to the next query, let's just take a look at what the rupee is doing right now. It's off the record lows levels right now. It's strengthened versus the dollar. Yesterday, the rupee shut at 79.87 to the dollar, and right now it is at 79.85. So you can see a sharp recovery come in the rupee for now. No doubt, all of them were anticipating that the rupee would hit that psychological 80 to the dollar mark today. But from those record low levels that it hit today, 79.96 is all-time record low of rupee which it hit today. From there on, the rupee has strengthened for now. You can see the rupee at 79.85 to the dollar. But let's move on and let's get going with the next query that I have is from Vinod. He's writing to us from Chennai, and he's saying that he's a long-term investor, but he wants to know which are the 2 sectors that will perform with good returns in coming 2 to 3 years, and also, if possible, some suggestion of the stocks in those sectors. Avinash, this one is for you. Which are those 2 sectors do you think that will be able to give good returns for the next 2 to 3 years?
Yeah, I think 2 sectors which I think should do very well over the next 2 years is first is the automotive sector. and second is the capital goods sector. I think because clearly capital goods sector has been, not performing for a very long time. In fact, since the last budget, the capital goods stocks have risen significantly due to the government's focus on manufacturing. So I think this is one sector which is now going to have a multi-year run of at least next 3 to 4 years. And within this sector, I think Cummins looks quite attractive. If the investor has a long-term view for the next 2 years, I think he should accumulate Cummins slowly. Definitely a risk reward, could definitely be very attractive here. The company is a MNC candidate, has a very strong order book, has got virtually no debt on the books. So I think very clearly, despite the fact that valuations are at a premium, the next 2 years can give a decent risk reward. And as far as the automotive sector is concerned, Cheryl, I think Mahindra and Mahindra looks very well poised to do extremely well in FY23. Almost all their vehicles are running at record order books. The new XUV 700 or even the Mahindra Thar is now having a wait list of almost 6 to 9 months. And plus steel prices have started coming down. So M&M could also be a reasonably good bet at the current odd level. So these two stocks and these two sectors, I think, would continue to do well, according to me, in the next, say, 2 to 3 years.
Okay. Moving on to the next query we have coming in from is on HCC, that's Hindustan Construction Company. Kunal, this one is for you. Abhijit has bought this at levels of 14 rupees. What should the short-term position be for this one, and how do you see the stock moving also in the long-term perspective?
See, frankly, I think HCC is not a stock which you should hold on from it, from a longer-term play. It's a stock which has gone into a significant downtrend over the last 10, 12 years. 2009, the stock made a high, I think, if I'm not wrong, around 70 odd mark. And from there, even if you look at the monthly charts or the quarterly charts, the stock has been actually making a pattern of lower highs and lower lows for itself. So would not advise this stock to be held on from a longer term play. From a short term wise, you can look out for maybe a target range, closer to the 200 moving average, which is at, I think, 14 odd mark as a near term target range. So maybe 14 could be a pivot point, and the stock may swing, 1 or 2 rupees from those pivot levels for itself. So currently it's placed at 12. You can look at a potential upside of 14, or if the stock gets into a momentum and the market structure also improves, then you can look at a max upside of 16 over the very near term for HCC.
Okay, this one is from Purushottam. He's writing to us from Bahrain, and he wants the view on United Spirits 100 shares purchased at 900 rupees per share. He wants to know the long-term prospects of this particular counter. Avinash, 900 rupees per share looks like at the upper end of the band for United Spirits, but nevertheless, for the longer term, how does this counter look to you?
From a longer term perspective, United Spirits will continue to dominate the spirits sector. And I think for a long time, raw material cost had actually bogged down not only United Spirits, but almost all other companies. My sense is that, raw material prices have started easing off, and obviously the volumes have also taken off post-COVID. So I think if the investor has a slightly medium-term view, he should continue to hold on. This is a market leader in its space, and I think considering the kind of brands and the kind of product bouquet it has, with of course support from Diageo, this company will definitely do well over the next, say, 1 to 2 years. So I think continue to hold on. The near-term underperformance will continue for some time, but over the longer term, a decent risk reward can be made from here.
Okay. Okay, the next query we have coming in is on Adani Power. Digambar Kunal wants to know your view overall on Adani Power. How are you looking at this stock?
So I would be of the belief that Adani Power, if you've bought at lower levels, I don't know what's your actual position into the stock price, but I'm assuming that if you've bought at lower levels, then you should continue to hold on to the stock price from a trading perspective only. I would not recommend this to be held on from a longer term play because of the way the stock tends to move. So, there have been phases where the stock gets into a rally of 50, 60, 70%, and corrections as well seems to have panned out in a very similar kind of a price performance for the stock on the downside as well. So purely from a short-term play, the stock is at 285. You can look out for maybe 300, 315 as a near-term target range. But as I said earlier, that I would not recommend this as a stock to be held on from a long-term play. So trading is purely which I would recommend for Adani Power.
All right, this next query that I have is coming in from Krishnan. He's writing to us from Goa, and he's saying that he has 200 shares of Karnataka Bank. He's bought it at around 18 months ago, but he wants to know whether he can hold on to it for the next 1 more year, and also will he make some profit on this one, Kunal?
So I think it looks attractive, even though Karnataka Bank has not been one of the strongest, banking names from the mid-cap side at least. But the charts have started to show improvement. The reason why I say it's an improving chart, because right now on the daily time frame, possibly over the next couple of days, the stock would probably give a golden crossover where the 50-day moving average would likely cross above the 200-day moving average. That could be a big trigger for the stock trend over the near term. So if you've bought or if you're looking to hold on to the stock price, I would recommend a hold. And if this golden crossover takes place, assuming the stock starts a fresh uptrend, that uptrend could last for at least another 2 to 3 months. So I would suggest a hold.
The next query, Avinash, we have is coming in for you, and this is from Ramchandran, and he wants to know the fundamental view coming in on Saint Gobain. They have some shares of this. They intend to hold this for 4 to 5 years. They've not mentioned the price, but what is your view overall on this one?
Yeah, I think Saint Gobain should do reasonably well, considering the fact that the major customer for them, the automotive sector, has started turning around. And they have a lot of OEM clients where they supply float glass and window panes glass and the side car glasses to most of the automotive four-wheeler companies. Clearly, this company is a MNC company, but as compared to the other player, Asai India, it is a smaller player. But considering the fact that we are seeing a very strong volume growth in the passenger car, market, plus very lot of new car models, launched by most of the manufacturers, especially from Maruti and by Mahindra and Mahindra, we expect that definitely this is going to actually throw a positive rub-off on a company like Saint Gobain. So I think continue to hold on. I think despite the fact that investor wants a 4 to 5 year view, I would believe that FY23 itself should be a strong year. And I think you should definitely get a decent risk reward in the next, say, 12 to 18 months. So continue to hold on because there are very few companies in this space, hardly 2 players in the organized sector place, and where entry barriers are very strong.
All right, this next query is coming in from Ganesh. He's writing to us from Bangalore. And Avinash, this one is for you. 525 shares of IEX is what he's purchased at the level of 220 rupees per share. What should he do with this counter? Does it make sense to hold on to the longer term? We know that now IEX actually faces competition in the sector once where it was dominant. Do you think for the longer term makes sense for Ganesh to stay put with this holding? No doubt right now he's making loss on his holding.
See, I think IEX is definitely, going to face competition, as everyone is aware that fresh competition has already started coming in. But I think the benefit of this competition, on IEX numbers, whether it actually impacts their revenue and profitability, is going to take a long time. See, this is a platform business, and obviously platform businesses enjoy very strong EBITDA margins. Plus, the dividend payout ratio for this company has been good. So, if the investor has a short-term view, then I think the stock may not go anywhere. But if he has a couple of years view and he can hold on, then only I think he should hold on. Because fundamentally, I don't think the market is going to be completely taken away from IEX. What may happen is a few percentage points of market share may get lost. But in terms of pricing and in terms of the profitability of the business, IEX has got several other levers, like they've started the gas business. The gas volumes have started increasing. So possibly in FY23, you could see some benefit coming in out from there. So unless the investor has a 2-year view, Cheryl, I think he should, not hold on. If he has a short-term view, I would suggest him to exit and possibly look at some other company. But longer term, yes, 2 years plus, I think this company should do reasonably well.
Okay. Kunal, the next query we have coming in is on Titan's call option of 2,150. Should one be looking to buy this one? And this query is coming in from Mr. Gupta.
Well, I would recommend a yes for Titan. I think it's an interesting chart. A few days back also I had given a buy call on Titan. My expectation is that the stock has formed a formidable base at the 1900 mark for itself. And even with that single day of gap up move, I think 6% or 7% up, if I'm not wrong, the stock had seen just about 4-5 trading sessions back. It's seen a consolidation as such. So typically after such a strong gap up, if stock consolidates, it's getting ready for another move on the upside. So it's probably likely to be a good strategy to buy the call option of Titan in the anticipation that the stock would break out pretty soon.
All right, this next query that I have is actually coming in from one of our viewers. I've actually missed that query. It was on Ashok Leyland. And one of our viewers wanted to know what should he do with his holding, but I'll take that once I find that query once again. Let me move on to this one then. This is from Ananta Krishnan. He's writing to us from Madurai. He's saying he's holding about 1,000 shares of Indian Bank at the price of around 174 rupees per share. He wants to know what's the short-term prospect for this one. Kunal, what's your take on Indian Bank? Do you think that this one also stands out in the PSU banking space?
Well, absolutely, yes. I think it's a stock which is getting into a recovery phase. In fact, it's formed one of the classical charts which we typically look out for on the weekly as well as on the monthly time frame, and that's a bullish flag or a pennant kind of a combination pattern for itself. So over the last, I think if I'm not wrong, some 7-8 months from second half of 2021, September, October 2021 is where the stock had gotten to a range, but the range is getting narrowed for Indian Bank. PSU banking stocks have been doing reasonably well over the last 1.5 to 2 months, especially with this price recovery compared to the private sector banks. So that's probably the other reason to look out for from the PSU banking name. So Indian Bank is what I would definitely recommend a buy, but you have to have a slightly medium term to longish kind of a time horizon over here. Don't expect high flying returns over the very near term.
Okay. Avinash, we have the next query coming in from you for you, and this one is from Nino. They want to know your view coming in on IKE Energy for the long term. What should they be doing with this stock? They've not mentioned any buy price or anything. What's your view on this one?
See, I think IKE Energy is into the business of actually analyzing carbon footprint, and I think the stock has been extremely volatile. I would believe that if the investor has actually purchased at a significantly low level, even before it got shifted to the frontline exchanges, I think that would be a better reason to hold on. The opportunity for growth in India as well as globally, carbon footprints measurements and research analytical services is growing by leaps and bounds. And I think over the next, say, 2 to 3 years, this could be a very big market. But unfortunately, liquidity in this counter is extremely limited. So the volatility in the counter is extremely large. So I would suggest that, unless you get a decent buying price and unless the stock corrects significantly, only then I think the risk reward and the ROI for you would be good. So if you have it already, I would suggest please hold on. Prospects definitely look good, but fresh buying at the current level should be avoided.
All right, this next query that I have is coming in from Jitendra. He's writing to us from Pune. He's a long-term investor. New India Assurance is the counter that he wants to ask his query on. Avinash, 500 shares at a price of 120 rupees is the average buying price. One, he wants to know, should he average at current levels or should he wait for some more dip in the counter? And also, he's looking to hold on to this counter for the next 3 to 5 years. How is New India Assurance looking to you in the general insurance space?
Yeah, I think, Cheryl, unfortunately, this company has not delivered the kind of returns and not generated, the kind of wealth in the capital markets. And I think, despite the fact that the stock is trading at a low level, the risk reward would definitely depend on how quickly the company ramps up its business, shows a decent profitability kind of track record. So I would suggest, fresh buying should not be considered unless, the quarter one numbers are out, because management commentary is very important. Overall, I would suggest that if he wants to invest in the insurance space, then I think LIC would be a better choice, because I think LIC numbers have come in today. The embedded value is almost 5,42,000 crores. And there, you're getting a stock at a fairly discount at the IPO level. So I think, that could be a better choice, considering the fact that life insurance business has got more scalability and the market size is significant as compared to the general insurance market.
Okay. Kunal, the next query coming in is on Tata Motors. We have a couple of queries on this one. One is from Leon, who's asking, they bought Tata Motors at 1,300 rupees per share at 460 rupees. What is the next 1 year levels coming in for Tata Motors? As well as we have a query coming in from Puneet as well, who wants to know the short-term target coming in for this one as well, Tata Motors.
See, I believe specifically that, so there are two parts to the answers. One is that, how bullish am I on the auto pack? I'm extremely bullish. In fact, over the last 1.5 or 2 months, specifically, we've picked up, likes of M&M, TVS Motors, etc. I think recently I've discussed about Maruti as well as better prospects of breakouts. But then, Tata Motors has been an underperformer. But, my sense is that if this is a multi-year rally which has started off for the auto names, Tata Motors may not lag behind significantly. There has to be a play of catch-up for Tata Motors. The stock is going through its own set of issues on the short-term timescale charts. Once those gets taken care of, I would be of the belief that Tata Motors should do pretty well for itself over the medium to long term. So not specifically oriented towards short-term view. Maybe short-term wise, the stock can continue to underperform or remain in this range of 420, 40, 45 on the upside. But from a medium-term view, I'm extremely bullish on Tata Motors, and I would recommend that if anyone is looking with a time horizon of 6 months, 1 year plus, then I think Tata Motors could be a good buy at current levels.
All right. The next one that I have is coming in on Tanla Platforms. This one is coming from Vishal. He's writing to us from Dubai, and he's saying that he's bought Tanla Platforms at a price of 1,338 rupees per share. He's saying now the counter is down by about 32%. He is a long-term investor, but he wants to know whether he should wait out or book losses. Kunal, Tanla Platforms, how does this one look on the charts? This one also bore the brunt of the weakness in the markets.
Well, yes, I think the stock is getting into a significant correction. 7th straight consecutive month where the stock is seeing negative price action for itself. So this seems to be now getting into an oversold territory. I think it could probably be a matter of time that over the next 1 or 2 months the stock should get into a bounce or a strong recovery phase, and whenever such kind of a stocks they get into a bounce or a recovery phase, you expect the stocks to cover up the underperformance of at least the last 1 or 2 months for themselves. So I would suggest a hold on Tanla at current levels, and possibly over the next 2 to 3 months, if the stock gets into a bounce process, and if you happen to get the stock price closer to your cost price, that would be a good time where you can look to exit.
Okay. Avinash, we have the next query coming in from Manjunath, and this one is on PB Fintech. They have 127 shares of PB Fintech at a price of 851 rupees per share. They're a long-term investor. Should they continue to hold or sell this one?
Yeah, I think Policy Bazaar is one of the unique companies which sells insurance online, and I think despite the fact that they have been in the market for last 10 years, unfortunately, the company has not been profitable. So I think unless the investor, can wait for next 2 to 3 years, because frankly, this is a cash burn business. The company is unable to make any operating EBITDA or operating cash flow, and that is the reason the markets are not very happy with these fintech kind of businesses. So I think unless you have a 2 to 3 year wave, then only I think one can reasonably expect such kind of companies to make money for you. In the short term, the underperformance will continue because the markets definitely would be looking at stronger EBITDA and stronger operating cash flow numbers, which is unlikely to happen at least in the next 1 or 2 years. So continue to hold on only if you have a 3-year view. Otherwise, I think it's better to book out and shift to some other company.
Okay, this one is coming from Baldev. He's writing to us from Jalandhar, and L&T is the counter that he's purchased at the price of 1,965 rupees per share. He has about 100 shares of this particular counter, Kunal. He wants to know for how long should he continue to hold on to it, and the shares are not seeing a pickup, so he wants to know why.
Well, I think you missed out on my segment earlier on Chartbusters, because that's where I explained the complete rationale of why L&T is at the brink of a major breakout for itself. Stock has to give a confirmation about that 1700 mark on a weekly closing basis. But I think if that happens anytime soon for L&T, say over the next 3 to 4 weeks, I would expect the stock to get into a multi-month uptrend, something very similar which the stock had shown over the last 2.5 to 3 years, and twice or thrice has been the occasion where the stock has been on the verge of a breakout, and once the breakout has been obliged, the stock has managed to give a strong multi-month uptrend for itself. So I think I would suggest that if you've bought at levels sub the 1600 mark, you should definitely look to hold on for at least another 2 to 3 weeks before the breakout actually happens for L&T.
Okay. Kunal, I'm going to come back to you. We have a query coming in from Hemant, who wants to know on REC and NMDC. How are you looking at it in terms of valuations? Could we expect decent returns coming in from these two stocks?
Well, I think both these charts or stocks have been very sluggish. I think REC has been one of the consistent underperformers. REC, PFC, they have moved in tandem, and both these stocks have continued to drag. Rallies. There are phases of rallies where the stocks rally up 15%, 20%. But then if you happen to buy the stock at the middle point of the rally or at the second half of the rally, then the risk reward is not in favor, and you tend to go into a prolonged wait kind of a period. Same is the case with NMDC as well. I would suggest an avoid into both of these stocks, and if you've already bought, then I think you should look out for those phases of rallies as a good point where you can look to exit.
Okay, Kunal, this one is coming from Aarti, and Aarti wants to know whether she should go ahead and sell Greaves Cotton. The buy price was 160 rupees per share, and instead look to buy Atul Limited for a period of 1 year. Do you think this strategy makes sense, shift from Greaves Cotton to Atul?
I think both these stocks are very similar in charts. Atul, the only concern is that the stock is illiquid. So I think if I'm not wrong, today also the stock has traded some 5,000 or 6,000 shares only on the NSE. Greaves Cotton, however, the volumes are quite stronger. I don't sense that it makes I don't believe that it makes a sense to switch from a liquid stock, a decent chart, towards an illiquid stock and a more hopeful chart in that sense. So I would not suggest that switch from Greaves Cotton to Atul.
Avinash, coming into you for the next query, that is on MSTC. Is it a good time to average this one? What's your view on this?
Yeah, I think MSPC could do significantly better because see, it's one of the government platform which actually is the main player for most of the 5G auctions as well as other related products and services which most of the PSU banks do. A large part of their business comes from the government sector, but going forward, the management has said that they are making efforts to ensure that revenue from the private sector also starts increasing. In fact, the company is almost debt free, and in fact, if you look at the provisioning made by this company in the last 3 to 4 years for their past debts is now going to get over effective FY23 onwards. So I think in terms of earnings growth and in terms of the opportunity for the e-business, which is basically very profitable, I would suggest you can hold on. Even investors who want to take a 12 to 15-month call can even average out or maybe buy at the current odd levels. This is one company where I believe in terms of the valuation, this seems to be pretty attractive if you compare it to the other e-platform businesses which are operating in India.
With that, let's kickstart with the rapid fire then. And the first one is coming in from Sunny. He's writing to us from UK. He wants to know about Garware High Tech. Kunal, do you track this one? He has 80 shares, purchased at 818 rupees per share. What should he do?
I would suggest a hold.
Okay. Avinash, the next query is coming in on Sandur Manganese, and Indumati wants to know whether it's a good long-term pick.
Yeah, I think if the investor has a 2-year view, then I think definitely at lower levels one can.
All right, Kunal, I know we've spoken way too much about IT sector, but L&T Infotech average buying price 4,732, Mindtree average buying price 3,713. Which one should the viewer add on to and which one the viewer should sell on?
So I think you can look to add both if it's not a hindrance, but not at current levels. Would wait out for at least another 5% correction, if not more, from current levels, and then that's where you can look to average.
Kunal, coming back to you again, we have a query coming in from Jay Krishnan, who's from Kerala. They bought Amber Enterprise at 2,642 rupees per share. Should they continue to hold, sell, average, and if average, then at what levels?
You can look to hold, and you can look to even average at current levels of 2,350 where the stock is trading.
All right, this one is coming from Anil. LIC 7,000 shares, average price 732. Can continue to hold on for long term, and for how long is what he wants to know, Avinash.
I think he should continue to hold on, and I think over the next 12 to 15 months, I think decent risk reward possible. That could be his strategy.
Okay. Kunal, we have the next query coming in from Vishal, who's from Dubai, has bought Tanla Platforms at 1,338 rupees. Now, obviously, he's making a loss, but should they wait to book out the losses? What should they be doing?
I would recommend a hold, and possibly over the next 2 to 3 months, if the stock gets into a recovery phase closer to your cost price, you can look to exit over there.
Kunal, Sunil from Punjab wants to know about PC Jewelers. Makes sense to enter this particular counter right now at current market price. Wants to know for 1 year time frame.
Well, not at current levels. The stock has done exceptionally well. It's risen up 100 plus in this month itself. So I think it's a bit too late to catch up the stock from current levels.
Okay. Avinash, the next query we have is coming in from Apala Raju from Bangalore. A long-term investor holds Dr. Reddy's 50 shares at 4,600 rupees average price. What should they be doing currently? Sell right now or wait for some time? What is your target and what should they be doing?
Yeah, I think over the next 12 to 15 months, we expect a strong outperformance from Dr. Reddy. I think expect a price of around 4650 to 4700. Hold on.
All right, and with this, we've come actually to the end of the rapid fire and the query segment. Thank you so much, Kunal, as well as Avinash for joining on the show. Thank you, Kunal, for the BNS and Pathshala segment as well, and for all of our viewers who've written to us and we've not been able to answer your queries. We will be back again on Monday at 11 a.m. Do tune in to us, and we promise you we've actually tried to take as many queries as we could, squeeze in as many as we could. But definitely we will try and address some more next week. So see you at 11 a.m. on Mondays. But not to forget, BNSN still continues, and we'll be back after this break.
It's the weekend.
Right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.